Hey everybody, welcome back. This is Ankit Duggal from RER. This is RER Deals of the Week. You know my friend here, Steve?
Hey, I'm Steve.
And today we'll be talking about the deals for the week of?
January 27th to February 2nd.
Alright, so let's remind these good folks out there who are the investors and potential investors, what are our key assumptions that we're going through?
Alright, so I'll just go over the assumptions real quick. We're purchasing it at 100% of the list price, 5% for a 30-year fixed mortgage rate. You have expensive, insurance, $1,200 per year, management fee, 8% of the month's rent, and maintenance, 1% of the purchasing price. Utility costs are $92 per unit, and 25% down payment, and vacancy rate of 9.1%.
Alright, so those are our key assumptions. They don't change from week to week as much. So we're going to be talking about, I think, two deals this week that Steve's identified. That one is a flip candidate, one's a cash flow candidate. So it's definitely the market strategy for both investors out there who want to either do flips or buy and hold. So Steve, take it away.
Alright, so the first one we'll be looking at is 104 New York Ave. Now this one is the one I would recommend for a flip. It's located in Ironbound, which is a great area. The house is just completely renovated from top to bottom. The basement's been finished and utilities are separated. No work needs to be done in this house at all. So just looking at the comparables, and on the slides are the closest ones I could find. This slide also lists differences in the comparables. Now the first two, would probably be the minimum we would sell at. I found them for $245 each, but they need repairs. And the other two I found, which sold for $299,900 and $324,000. Those are in excellent condition, so they probably resemble the house more. So, I believe this house could sell somewhere in the high 200,000s.
So, in this scenario, as Steve pointed out, to flip a property doesn't necessarily mean you have to buy it completely distressed, fix it up, and then move forward. You can buy a property that's fully renovated, like this one, where maybe another investor got it at a great price, now needs to get out, and you can utilize a assignment contract if you work with this, if this is a wholesaler or another investor who wants to get out of the property, or just a quick flips transaction whereby you buy it and then you line up an end buyer. We can talk about what we did. It's called our RER swing trade strategy. Go to our website, rernj.com. Check out that case study on how we use the concept of assignment contracts to structure a very creative deal for something similar to this, which was on Parker in Newark last year. So check that out as well. So what's our next deal, Steve?
And the next one is 58 4th Street. This house I recommend for a buy and hold. It's located in Fairmont. The house was renovated in 2008, so it's in decent condition. All the utilities are separated, and right now it's fully rented out, although the rent is currently going for about the median price in the area. Tenants are getting fair value, and they're currently getting about $2,850 in rent income per month.
So it's already fully rented. So their leverage cash on cash return is how much?
About 20%.
20%. And then on an all-cash basis, what are we looking at?
You'd be looking at about 9.89%.
Alright, and what's the condition of this property?
It's in decent condition.
So it's in fair condition of this property, so if you're looking for a decent buy and hold investment for under $150,000 and you got some money to deploy, this is not a bad deal. It's a decent neighborhood and you're earning a good, levered 20% rate of return on your investment after a vacancy factor, a management fee, maintenance for a buffer, so it's a very safer projected deal. So once again, the two deals this week we already talked about. One's a flip, one's a buy and hold. This is Ankit Duggal from RER Deals of the Week.
And this is Steve.
Look forward to seeing you guys next week.